Okay. Well, I think we're going to get everyone that's going to join us today. Thank you for being patient with us while we let everyone find their virtual seats. But today, everyone's going to join us for a discussion about labor burden and what exactly is that? How is it affecting your business? How to cost for that, and go into some of the details. And today we are joined by our wonderful friend, um, Tanya Schulte. Thank you. And so a little bit about myself. My name's Dwayne. I am the head of sales over at ClockShark. And a little bit about my background. I grew up in construction. As you just heard us talking about, I still do a lot of it. I do most of the projects on my house, and for some friends. And I went to school for it as well. And even in college, I was a project manager for a large construction company. And now I work in sales so just over the last decade, I've been in some type of sales role. And so at ClockShark, my two passions kind of collide. And so it's been great being able to talk the talk and walk the walk with our customers and have this side of it. And I'm excited to have Tanya with us today because the topic that we're talking about today is literally what she does every day. So Tanya, I'll let you talk about yourself.
Awesome. Thank you, Dwayne. Yeah. I think we had talked about this before too. We kind of have similar backgrounds. I grew up in a construction family too. Literally, my mom would sometimes be halfway through a school year when my grandfather, who was construction superintendent, would like pick the whole family up and move them to a new place. Right. So she like never stayed in one place. But yeah, that's been like my whole life as well. Straight out of high school, I was going to college, taking accounting courses. I got a job working for an architect and home builder and started doing QuickBooks things for him. Yeah, while I was still in college. So I have literally never done anything besides construction accounting and raising my kids. So this is my life and I love it. Yesterday, one of the other ladies on our team who's actually answering questions here today, Alicia, we were in a client meeting and he started asking questions about labor burden. And Alicia laughed. She goes, Tanya loves this stuff. So
that's great.
I live in labor burdens and I love it. So
we'll get into some of this stuff, but it's just so interesting. The reason why a lot of these businesses come around or get started is because they like the trades, they like the skill set, they like producing things. And then the reason why they fail is because of the stuff that they don't like, which is everything we're going to talk about today. So it's super important that we get into it.
Not even don't like, but I think more importantly, don't know.
Yeah. No, that's a good point. You don't know what you don't know until you know. I feel like there was a 90s rap song that broke that out a little bit better than I did. But to kind of move things on, as you guys can tell, Tanya and I can get on some crazy tangents, but
we like to talk.
Yeah. We need one of those conferences where we can get out of our system.
Exactly.
So joining us on the back end today, we have Alicia from the Profit Constructors. Alicia's been working in construction and accounting since she was a teenager. That space is where she got all of her skills and abilities. Like she's huge in all of this stuff. She knows everything about accounting in the construction worlds. And like you just heard Tanya say, she likes to promote it very well. And then on the other side, we have Felicia. So we got Alicia and Felicia for ClockShark. Felicia came from the customer support background. She started taking care of you guys in your accounts, helping you figure out issues. And now she's part of our marketing team. So she helps tell your story to help other people get along with opening and running their businesses. But they're going to be on the back end. If you guys have questions or comments or anything like that, they're going to be the ones fielding them and making sure you get heard. And along the way, if there's a question that pops up that's relevant to the slide or the topic we're on, we'll probably answer it live. So don't hold back. Don't wait for polls to come up or anything like that. If you got a question, go ahead, raise your hand. I'll show you where to do that in a second. So there's a couple of different things, some house cleaning items. We will send you the recording 24 hours after the webinar is over. I emphasize that because the last time I did this, I said, we'll send it to you right afterwards. And our coordinator on the back end gave me quite the words. But anyways, moving on. Like I mentioned, submit your questions at any time. At the bottom of the screen, there's going to be a little comment or chat option. There's actually the ability to raise your hand. That'll notify us that you have an important question. And then throughout the presentation, there's going to be poll questions. So they're going to interrupt your viewing experience with questions right in front of you. And so we really appreciate that when you answer those questions. It lets us know, one, you're still there, and two, how you're receiving the information that we're giving you. So again, we'll send you the recording. Submit your questions at any time, and please engage, interact with the questions that are coming up. So the agenda, we're going to cover what is labor burden. We did a webinar a couple months ago about job costing, and a lot of people think they're one of the same. And in reality, it all starts with labor burden. And so why is it important? What's the difference between labor burden and payroll costs? The basic labor burden calculation. So if you fall asleep during this presentation, stay awake for number 4, because that is probably the biggest takeaway. And then, of course, number 5, we're going to go through some key takeaways that you can use at your business right when we're done with this. So you can take some information from here and go use it right away.
Yep.
Okay. So poll question number 1. Tanya, I'll let you ask this one. I've been talking a lot already.
Yeah, it's all good. I love this one too. How familiar are you with the true cost of your employees? So clearly you see the answers there, vary somewhat, a little, or not at all. And I like this question because when we come into a client's office, when we start working through their job costing with them, this is really where we start. And they're always like, what are you even talking about? Of course, we're familiar with the true cost because they believe that they know what the wages are and maybe even some taxes and stuff. But it's interesting when we really dive into other items. In fact, yesterday I was saying we were in a meeting with a client. And when he started asking about this, you could see little light bulbs going off all over his head because we were saying, have you thought about this? Have you included that? And he was like, oh. And then he started asking questions and engaging with, well, what about when we buy these things? So it was really good. Again, that's one of the reasons why I love this. When we go into a small business and start helping clients with it, because not only does it improve their business, it just opens up this whole new way of looking at hiring employees, whether that's in construction out in the field or even in the office. Like, can we afford new people?
It definitely does for me. When I was younger, when I was working for my dad's business, and we started breaking out this stuff because we had a similar problem where it was just, we're not bringing enough money in, even though we're charging a ton of money for projects. It just wasn't going to the right places. And so we just realized that we actually weren't charging enough because we weren't covering even the cost of our employees working. But anyway, so I appreciate everyone that engaged to answer the questions. It was how familiar you are with the true cost of your employees, and majority of everyone said somewhat.
Yeah.
So it'll be interesting to see how much more you're able to get after this.
Yeah, it's a great answer, right? Because again, back to you don't know what you don't know.
Yeah. I have 4 daughters, so I get that every day. So what is labor burden? So labor burden, really, it's the calculation of what a single hour of work actually costs a company.
Yeah.
And it's not, I'm paying this guy $18 an hour. It's everything included about that. It could be direct cost. It could be taxes and everything that's incorporated with it. So it's a cost rate used in budgeting, not the billing. So can you, Tanya, can you break that out a little bit?
Yeah, I think so. We just kind of touched on the first point there, right? Like, okay, do we really know what every single hour of work that someone's working on the field, what is that costing us? Or someone's working in the office, what is that costing us? But especially, I think when you have these types of projects, whether that's in construction or architecture or any other type of service-based work where you are really charging for an employee's time that they're doing something for your client, this is the rate that you want to put into the budget. So one of the things that we encourage all of our clients to do is build an upfront budget prior to sending a proposal out to the client, right? So that we can say every bit of what's going to cost us, and then we add a margin onto that to go onto the proposal. And so I think that's where the breakdown comes in between cost rate and billing rate. The rate that we're putting on our proposal should include a margin over and above what we're talking about today. So what we're talking about today is what you want in your budget, and then you're going to add a margin to it to send your proposals out.
Yeah, and we'll get into that a little bit later in the presentation, but that's a really good distinction because, like ClockShark, the time tracking company, we get questions like that all the time where I need job costing, and then we'll get into it, and in reality, they need their labor costing. They don't need the job costing. They need the details of what they're paying their employees, not so much hours and tasks per job. And so it's really important to understand the difference between those two.
Right. This is just taking, okay, what are we going to add into that cost of the employee?
Exactly. It sounds much more complicated, but in reality, it's a lot more simple than people may think.
Mm-hmm. Yeah.
And so why is it important? So I'll let you answer these because I feel like you have more passion behind this than I do.
Oh, yeah. I think especially because not only have I, like I said, I worked in corporate construction accounting for a long time, but my passion for this really grew out of working with small businesses because we have helped so many clients see this in new ways. And like I said, it helps them to budget better. We've talked about that a couple of different times already in this, and we're going to dive into how it can help you budget better as we go on. But we've even been able to help them understand, like, okay, if you wake up one morning and decide you need to hire a new superintendent out in the field, and you go, oh, okay, well, I think I want to pay him this much per hour. All right, that sounds like I could afford that. And then you just go out and hire that person based on that wage amount. You're not really, that's why this third point is so important. And we've helped so many clients when they've come to us and said, okay, hey, we just decided we're going to bring on Joe Schmo to be our new superintendent. And we go, wait, let's calculate the cost before you do that. And then once you calculate the cost, then you can decide, is it worth it to the company? Is it going to help the growth of the company? But you have to put all of those pieces into place before you go do that.
Yeah. And things like that help me staff projects and jobs when I was in construction. Understanding how much someone was making and understanding that cost rate was super important for when, like we used to do a lot of insurance jobs and they would only pay a certain amount for labor. And so understanding what that person is actually costing us was really important to whether or not we made money on it. Because a lot of times you go and put a lead technician on a small job to just get it done. Yeah. But then you get the cost part of it and you realize you broke even.
Yep. Oh, yeah. When you were saying you guys do a lot of insurance jobs, we have clients that do that. We also have clients that do a lot of government work, and it's the same thing. They're putting a lot of restrictions on what you can charge. And if you don't know what your costs are and you can only bill so much, you might only be breaking even, or you might even be going in the red every time you send X person out to do that project.
Yeah, exactly. I mean, I'm pretty sure this is why unions exist, but
yes.
And then we kind of touched on it a little bit, but the difference between like labor burden rate and the payroll costs. So we're throwing around a lot of labels here, folks. So again, we're going to send this to you. Try to take some notes as you go along, and feel free to ask the questions in the chat box so that way we can get to you. But again, labor burden rate versus the payroll costs. So we've talked about like the labor burden itself, job costs. And so now we're going to talk a little bit about the payroll costs associated to the labor burden. And so we'll break that out in a second. I just want to make sure everyone's still following along.
Yeah.
Okay. Go ahead.
I was just gonna say, I think this is where we really start to get into the weeds, right? Or not into the weeds, hopefully, but where we really start to get into the juicy stuff, because again, Dwayne laughed when I first threw this up because it says unburdened labor rate when we're just talking about payroll costs, right? But that's really what it is, right? Like if you're just taking your gross compensation paid to workers as your calculation of what those workers cost you, then you're missing a huge piece of the puzzle. And so the burden labor rate includes a lot more things. And then where it gets even a little more juicy when we start working on this with clients is a lot of our clients have thought this out a little bit more than just saying, okay, I'm going to pay Joe Schmo $30 an hour out in the field. They say, and then I know that he costs me in employer taxes that I have to pay. And I know that he costs me in workers' comp that I'm required to hold for him. And so they calculate those things in. I think where we really start to make this magic sort of come alive is thinking about a lot of other indirect costs. So when we say payroll costs, you could be thinking just the gross wage, or you could be thinking taxes and insurance as well. But a true good burdened labor rate is going to include a lot of other indirect costs as well. So don't just think payroll costs. Think all kinds of other things.
I was going to say, like, that's one of the things that always got me when I was working with our payroll department. And there were costs that, not that they were arguing with me on, But there's that other side of it where they would give me the run rate for an employee and it would only be their payroll. I'm like, well, there's all these other indirect costs like tools, for example, or
Yes.
supplies or something like that that you keep in the truck that you have to constantly account for. And do we
Uniforms.
yeah.
Yeah.
Oh my goodness, the uniform stuff, laundering. Like if you work
Yeah.
for a larger company, like a franchise, and you do laundry, each one of those sessions or how often you get them washed needs to go into their cost rate. And do we
Yep.
get into breaking it down? Okay.
Yeah.
I think we do.
Yeah.
So to kind of go back over that really quick, the burden labor rate is the gross compensation plus all of the other costs associated with employing that person, not just their hourly rate.
Right.
So poll question number 2, what are you including when calculating labor costs?
I love that last answer.
Indirect costs?
Calculating labor
Right?
costs?
So what are you including? It's either indirect costs, direct costs, or C, straight wages and taxes plus insurance, or we don't know.
Yeah, and I want to point out too, like I said earlier, like for construction companies, this is important because you're doing stuff out in the field. But I just had a conversation with a friend of mine yesterday who's like, "Hey, you're doing that labor burden thing. Like, we have a client who wants to know every time they hire a new person, and let's say you have to add a seat on an app, right? Like, let's say an app charges per user for that app. Like that's the kind of thing that needs to be included in this too, right? So there's so many different ways to take this.
Yeah, and that's a good point. Those are things like the technology usage in companies. I know I forget to do that now sometimes when we're looking at specific things, and yeah, it could be extra costs that you don't really think about, but at the end of the day, you have to calculate all of those things.
Yeah, I think that's why every time you're doing this, oh yeah, see, there you go. That's what I was saying earlier. Like a lot of people are saying they're adding straight wages, taxes, and insurance and not taking into account. Okay, when we bring on a person and we have to add a seat for them on this app, and we're going to issue them a cell phone. We'll get into some more of that as we go. But yeah.
Yeah, I feel like a lot of people just put that in overhead.
Yep. Which technically, from a financial standpoint, is exactly what it is. But when I'm trying to figure out what the employee costs me to be out on the job site, I need to know what those overhead costs are.
Yeah, they think it's all. I feel like it gets confused and put into the same bucket. And when they're out, where the big disconnect that I saw was that estimators, or when companies go out to bid jobs, they're only including the payroll costs. Yep. They're not bringing that overhead into it, and so they end up breaking even or worse, lose money.
Yep, exactly. Very true.
Let's dive into a little bit of numbers. We're going to get into the basic labor burden calculation. And so, Tanya, this is your bread and butter, but let's go over some basic stuff that they can take back to their business right now and put into play.
Yeah, no. And I love paying it forward. I love helping people get this. And I like those light bulb moments. I hope there's some today. Yeah. So this calculation is just like I'm an accountant, right? I love formulas. But what we're talking about, and this is where we get into the bread and butter of what you said earlier of, okay, what are we going to include on the budget? That's this number that's at the end of this equal sign. So we're going to go through a whole calculation that will help us understand what does this employee cost me annually. We'll divide that by the total number of actual hours worked. And that's an interesting piece also that I think a lot of people don't understand is how many hours is an employee really working? So that's something we'll dive into. And then equals, okay, what is the number that I'm going to put into my budgets going forward?
Yeah, that's a good point. That actual hours worked it's kind of eye-opening for a lot of business owners, because that's when they start using a system like ClockShark or any other time tracking app, because they need to understand how to do this. And you really can't unless you understand exactly what they're doing out there.
That is such a great point. So the client that we were talking to yesterday, when we started talking about some of the stuff, he went, oh, so when I'm doing time tracking, I should have my guys actually make notes about when they're doing training or when they're doing safety meetings or when they're traveling. Oh, they shouldn't just clock into the job when they leave their house. They should actually say, this is my travel time. I was like, yes, Yes, that is what we are saying. Yeah.
Yeah.
So this slide actually talks about that, right? So in the earlier example, I said, okay, this client wants to go hire Joe Schmo to be their new superintendent. So before we even say, what are you going to pay him? Let's start talking about how much is Joe going to be working for the company. And we'll go, okay, he's going to be 40 hours a week because he's full time, and that's 52 weeks a year. So he's going to work 2,080 hours a year. Except for you're probably going to want to keep him happy. You want to keep him working for the company, right? So you want to give him holidays and vacation days, personal and sick days. And then you probably also, if he's going to be your superintendent, he's going to need certain trainings and certifications. And that 2 days might even be a low calculation for that kind of thing for certain people, right? But let's say that that's what it is. So now he's really only working at this point 1,888 hours. So, now we're getting into the part of saying we have to start understanding how that factors into that final cost rate, because we're paying him for those holidays and we're paying him for the training and certifications. So he's costing us some money, even when he's not out on the job.
Mm-hmm.
Yeah. And it just goes on and on. And these, again, talking to clients and saying to them, you're going to require him to hold a meeting with all of his guys before they go out and do the work, because he has to tell them what needs to be done on the job site that day. Yeah. And you're going to require him to track every person's time on the job. If he's using, how do you guys do that in ClockShark? You guys have like the foreman can check him in and out, right?
Yeah. The crew clock. I mean,
yeah,
it's interesting that so much is won and loss between the lines. Like a lot of company owners that we've talked to, whether it's 5 people or a 50-person company, I mean, it's just amplified even worse when it's a larger company, but still it's these little, what seemingly incremental adjustments that ultimately make or break a company. When you've got 10 people and you don't account for these types of things, that's when it starts to fall apart. That's where it seems like you can never get your bank account caught up.
Yep.
And this is why. And
when we sit down and start talking to clients about this, it's always fascinating, because when I say, okay, what else? They'll be like, no, that's it. That's all that we're asking him to do. Other than that, he'll be working. And I go, oh, okay, but when he comes back to the shop, how much time does it take him to unload his fleet vehicle? Mm-hmm. Oh, yeah, maybe like sometimes half an hour. Or, okay, well, when he's out in the field, does he have to do OSHA safety meetings? How much time do you require for OSHA? OSHA wants you to do that, every so often. So, and then, so it just takes, again, going back to the you don't know what you don't know, it just takes our team kind of diving in with a business and saying, what are really the time sucks on your employees' time? We have to account for that. Yeah, it's interesting. I was chatting with one of our clients a couple weeks ago about this, and he was telling a story about when he made the decision to get rid of fleet vehicles and uniforms and just pay his employees a couple dollars more an hour for them to drive their vehicles and wear whatever they want, within a guideline. But he started doing this stuff, and he finally figured out that he had a lot of hours and a lot of labor costs and indirect costs that he couldn't bill to projects, which were the shop time, unloading vehicles, those types of things, laundering service. Yeah, they're indirect cost, but he wasn't able to bill for those. And so he did the math. And if he just had them show up in their own rigs and pay them a little bit more to do that, he could bill that stuff directly to the customer and then not have any quote unquote time sucks. And so again, it comes back to 1, being able to track this stuff, and then 2, understanding what to do with it so you can make better decisions as a business owner. Yeah. And before we move on, I just want to make the point that this, to me, is one of the biggest reasons that we encourage our clients to look into ClockShark, because it's the tracking of it that you have to start with. Mm-hmm. Okay. It's good stuff. Using my cursor. Okay. So here is a couple of examples that Tanya will go over. And these are all things that a lot of businesses run into. And so go ahead. I mean, quickly, I know it's a lot of information, but let's see if we can kind of break this down. Yeah. And making the point too, that like everybody gets this recording, and, feel free to like go through and pause this and kind of take a look at this. I'm not going to read every single word on this slide, but again, this is some of the stuff that our team will dive in and help people start to really think about and start calculating. I think some of the things that we hadn't even talked about is like, are you providing benefits? So, health insurance and 401k, that's going to be calculated in here. We just kind of touched on fleet vehicles, or even, like if you're allowing your guys to use their own vehicle, that's still, depending on how that's working out, that might be considered fringe benefit if you were paying something for them to do that. So, thinking through those things. Training, we talked about. Tools and equipment is a huge thing, right? Like if we have a client who's in the electrical field and they have some of their guys have to have certain wire cutters, right? So like you're providing them that equipment. If you're buying that, that's something every time you hire a new tech, you're also going to have to go out and buy that particular set of wire cutters, right? So these are the types of things that when you get ready to hire someone, if you have calculated about this and thought about it up front, you then begin to see, okay, when I go to hire him, I'm not just paying this wage. I am also buying these types of wire cutters. I'm going to buy him a uniform. I'm going to buy him steel-toed boots. I'm going to buy him certain safety glasses. These are all the little tiny things, gloves, whatever you are buying every single time a new person walks in the door, you have to calculate that in.
Yeah. And not just construction companies, but like even software companies like ClockShark, we go through these things. We have to look at the whole checklist. And that's why not only tracking this stuff on a financial point, but having an onboarding and training program going forward so you can anticipate what's going to happen along with the costs.
Right. Oh yeah. Excellent point. Yeah. And then this is where we take all of the information from the last slide. So we had added that all up. So now if we're hiring Joe Schmo and we knew that we were going to pay him $25 an hour, he was going to cost us $52,000. If that's the only calculation that you as a small business owner do, is that he's going to cost me $52,000. Look at that higher number, like the total annual burden cost to hire Joe Schmo, it's almost $20,000 more.
Yeah, exactly. And so if you're looking at the slides, basically what we're doing is we're taking their base rate that they make on an annual basis and adding in all of those indirect and direct costs to it to get that 20,000. So you add the 52,000 from the annual compensation with those other costs to get that total of almost 72,000.
Right. So again, this is where, like I said, sometimes if we just like make a knee-jerk decision that we've got to go out and get somebody, we've got to get him in the door right now. And if we just do it from a knee-jerk standpoint and say, oh, I'm going to pay him this, he's going to cost me $52,000 a year. Or let's say even add in the taxes and the insurance. Let's say, we bumped it up to $62,000. We're still missing almost $10,000 of costs that we're not able to really put into our budget correctly. And so then when we get into the calculation, now we knew how many actual hours he's going to be working. We know what his total annual burden rate is. So the cost rate that we want to put into our budget for him, where we take the total annual cost and divide it by his total number of working hours, we want to start costing $40 an hour on our budget for him. And again, that's not the billing rate, right?
Yep.
We're not billing the client $40 an hour for Joe Schmo, but that's our total burdened cost if we've done this calculation the way we did it.
Yeah. And just to kind of recap for those of you that are like myself, who needs to understand this a little bit better. Again, we took the base pay for 52,000 and we added those other costs. That was 20,000 to get our 72. So we took 72,000 and divided it by the total actual hours, which was just under 1,800. So 72,000 divided by 1,800 is what gave us that $40 an hour cost rate.
Right. And then the little thing down below that says burden rate. So that actually helps you understand what the total rate is that we're adding to his wage.
Yeah. And before moving on, I want to acknowledge a couple things. Heather, you raised your hand. I don't want to ignore that, but if you have a question or if it was an accident, that's fine too. But if you have a question, just put it in the chat box and we'll either answer it or one of our fine Felicia or Alicia will answer it for you. And then Taylor, great question. He asked a question, or she, my apologies. If you have a spreadsheet template, and you said you do?
Yeah, I do. In fact, if whoever is watching this, if you guys just want to reach out to us at hello at theprofitconstructors.com. We have a super simple burden calculator, and it's on a Google sheet, and I'm totally happy to share that.
Yeah. And if you don't use Google Slides, I'm sorry, but we can find an Excel version of it for you too. Okay, so we kind of just breezed over a lot of the stuff, but what's included in that calculation that we did, and to kind of break it down a little bit further, it should be based on the actual hours worked. And so we talked about removing holiday, sick time, those types of things. And you should really honestly, I think a good rule of thumb is try to over calculate it. Add everything you can think of in there so you don't miss something. That way, if you go into a client's project and you're up against another competitor, if you I don't want to say overcompensate, but if you overestimate what your cost rate is, you have more wiggle room to come down if you need to. But if you go in and don't add your cost rate correctly, and you have to give a discount to go win a bid, which it's unfortunate either way, then you run the risk of losing money on that project.
Yep. Yes, absolutely. Yeah, everybody that wants that sheet, let us know. And Alicia can type those answers for the email address. Again, it's just hello at the Profit Constructors, but she can totally get that out there.
Yeah.
Yeah. It's totally.
Sorry,
you know what?
I was reading Heather's
find out
question.
with Felicia, and no, it's fine. I can find out with Felicia and Jessica if we can even just include that when they send out your stuff too. That's not a problem.
Yeah, I was thinking that might be pretty good too. Yeah. Because I know everyone doesn't like to email in because they think you're going to get a call from a salesperson. Mm-hmm.
Right. Yeah, and you won't. I promise. Like we don't.
Yeah.
Like, right now, I will be perfectly frank with you guys. We have clients on a waiting list. Like we're not even taking new clients, so I promise you, we will not be marketing to you right now.
Well, like Heather's question is a good one that comes up. She has some companies pay a different rate for drive time. How is drive time calculated, and can we pay a lower wage for time spent driving to job? That sounds like more of like a statewide type of thing, because I know in California you can pay a lower rate for travel time, and then you can bill that to the job. But I think it's highly dependent on where you're at. I know some states don't allow for that, but in terms of the tracking, one, you have to get your employees to either write it down or you can get a mileage tracker. You can use a system like ClockShark. There's a bunch of different things out there, but you just have to figure out if you're going to add that into your costs.
Right, exactly. And so I think to the point of the question, like how you calculate for drive time, I agree with you. I think it's dependent on what the situation is.
Okay.
But a huge piece of it, and we've been talking about this over and over, and I'm not just saying this because it's a ClockShark webinar, but I'm saying it because I love proper data tracking. You have to track it somehow, right? Like I think that a huge important piece of that is if you're tracking your drive time, there are two different ways you can look at it, right? If you're allowed to bill that back out to the client, go ahead and bill it. If you're paying that lower rate, then you're going to calculate all the same stuff that we just went through. But if you actually are paying a lower rate to the employee, use that lower wage rate as your basis, but you still are going to need to calculate indirect costs into that drive time, right?
Yeah.
So I think that kind of answered that question a little bit. I think she was trying to figure out, like, do you still need to add a burden rate to that drive time? And you do.
Yeah, I would think just a good rule of thumb when it comes to this stuff is just always include burden rate.
Yes, because at the end of the day, part of the whole point of the burden rate is understanding that, again, it's not just about what you're paying them. It's about everything that they cost you when they walk through the door.
Yeah, no, that's a good point.
Yeah.
I perfect segue. Don't forget to include certain things, right? A lot of businesses will just include tax and workers' comp, 401k, some of that stuff, but we'll give you some examples of the indirect costs, right? There's the communication expense. If you pay for your team's cell phones or radios, or if you still use a beeper, right? That type of stuff.
So many companies right now are issuing iPads, right? Like if they have clients out in the field, they want them to be able to have people sign off on RFIs or estimates or all kinds of things. And that's a huge shift that's happening where they have to, instead of carrying big giant sets of plans around, they're carrying iPads.
Yeah. I always think this one people miss or don't even think about. It's the depreciation on fleet vehicles. Like, I know depreciation is an entirely different topic, but the depreciation rate that you get, that should be included because that is a cost of doing business and it's a cost to keep your employees working.
If you have a fleet, it's got to be included. Yep.
Yeah, no, that's great. And we touched on some other things: training, safety meetings, uniforms. The tool loss thing is always an interesting topic. Then, of course, the vehicle maintenance. Tool loss, though, like you kind of talked about earlier, is there's certain tools that some people on your teams need to have in order to do their job effectively. Like you mentioned, the wire snips. I've got 5 different types of wire snips. They're all for something different. And if I forget one of them and I'm trying to redo a light socket, I have to go buy another one.
Yep. Yeah. And how many times has that happened to some of our small business clients that their guy loaded his van that morning and that's exactly it. He forgot to throw that one set of wire snips. So he's halfway through the job and he's got to run down to Home Depot and he's going to buy another set because he's not going to drive all the way back, say maybe 1 or 2 hours back to the office, right?
Yeah.
So those are the types of things, again, that when we sit down and we start working through this with a client that we're going to say, have you guys thought about this? Not even in terms of like somebody stole tools off your job. That happens all the time too. But just in terms of like those little tiny things that the guy's going to forget. He's going to run to Home Depot in the middle of the day to get. That drive to Home Depot is a cost.
Yeah, it sure is. It's crazy. I had some cabinet work done in my house a few months ago. And one of the guys, super nice guy, but he left his 1-inch putty knife, little anvil putty knife.
Yep. I was amazed at how we just went through a home renovation and I was amazed at how many things got left behind in our home after the guy. I was like,
that's how I have some of my tools. I'd call them and they're like, nah, don't worry about it. It's not worth the drive. It's like, cool. I'll take that.
But then that company that has hired that person's got to be thinking about that in calculating their labor burden rate.
Yeah. I'd be looking at taken away from their Christmas bonuses. Like, oh, how many tools did you lose this year? All right. So kind of wrapping it all up, some key takeaways we want to get into is labor burden. It doesn't have to be a burden. We covered a lot of information today, a lot of numbers, a lot of acronyms and labels and such. Once you kind of get the basis on knowing it exists and some type of template that we'll send you, it can be a lot easier to figure out and it'll help you when it comes to bidding jobs and actually earning money and staying afloat.
And I think the key point in what you just said there, Dwayne, if you don't mind me interrupting, is knowing it even exists, right? Like a business owner takes a good first step in just saying, I know I need to calculate it, and then go out and do some research and find out how better to calculate it. But knowing that it's a thing and that you should be doing it is a good first start.
Yeah, because like we said in the beginning, you don't know what you don't know. And then number 2, you are fully capable of calculating labor burden. You don't have to be someone like Tanya or Alicia to do that. Once you kind of take what we showed you today back to your business and implement it, it's not going to be super easy because maybe there's something that you need to incorporate that you don't track yet. And now you have to start tracking it. So, but you are fully capable. You don't have to have a master's degree in accounting to be able to do this. Just understand where your costs are and start tracking them. Yep. And then job costing starts with cost rate. So this is an interesting one that I actually learned not too long ago, is that you can't do job costing without understanding your cost rate.
Yep, exactly. I think that's a big point too. So, and we didn't even kind of scratch the surface about job costs in this because it's all focused on labor burden, but you had made the point that some people think they're the same thing and they're not. So to even actually have accurate data in whatever program you're using to do your job costing, you have to start with accurate time tracking data that translates into accurate labor burden data.
Yep, 100%. Number 4, I feel like we should put a big asterisk on that one, is your cost rate is not your billing rate. Yeah. We talked about it before, the example of the $52,000 annual salary, the $20,000 in costs divided by the actual working hours gives you that $40 an hour. That's not, you don't bill for $40 an hour.
Right. Now you have to add your margin and say, okay, what do I want to make on this job?
Yep.
and I'm going to bill that rate. Yeah.
Yeah. It's interesting to see how often, like I've had work done in my house. I do most of my work, but when I have the opportunity to get a detailed invoice, it's interesting to see how often that happens where they're giving me the cost rate. And I've got a pretty good idea of what the average compensation is in our local area and what taxes are and all that stuff. And so when I get an invoice where they're just billing for, it shows labor and materials, and labor's at like $35 an hour, I'm like, where's your markup? Like where are you staying in business? And so you run into this unknowingly all the time.
Yep.
And then of course, use all the tools at your disposal. There's tools out there for everything, just like in your trade of choice. If you're a finisher, if you're a painter, if you're a mason, a general contractor, you have specific tools to do specific things in your business. But what about operating your business? Where are those tools to operate your business? Use them. Right. They're out there. Don't try to do everything with pen and paper.
Right. Absolutely. This is a huge one for us because we work with a lot of app partners that we love, obviously ClockShark. But there are programs that help you break this down. When you go to build a budget, you can actually put all your labor burden calculation into those other programs, and it will put that into your budget for you. And you can break it down for multiple employees, or you can break it down by role. So let's say you want to do one for foreman, one for journeyman, however you want to break those things down. There are some great tools out there to be able to do that as well.
Yeah. I know we plug ClockShark, but that's what we do. We help people understand how to start their job cost by tracking the labor itself. And in ClockShark, there's a couple of reports that you can use to calculate that. One of the things that a lot of people do is there is a pay rate property or a field in the employee profile on ClockShark. What we always coach people to do is to figure out the employee's cost rate and to put that in their pay rate field in ClockShark. It's not payroll, but what it'll do is it'll allow you to pull reports every day, every week to understand where your costs are per job. It's not as advanced as like a work in progress report, but it gives you a really good snapshot of where you're at in terms of budget per job.
That's a great, great tip. And I think that the most important thing what you said, so I want to reach in there and pull it out, is what you're coaching them to do is not to put in the pay rate field that you're paying him $25 an hour.
Yes.
The better practice would be to put the cost rate that we just went through the calculation for, and then you get to really see what your costs are on that job.
Yeah, 100%. I mean, it says pay rate field, but don't use it as a pay rate. It just use it as a cost rate, because we don't pull taxes or anything like that. We're not a payroll company. We help give you a general idea, but use it for that. Quick reports. A lot of our customers do that per job so they can see where they're at in terms of costs before having to run payroll, because a lot of times you don't get those reports until you process that button. Like if you use QuickBooks, it doesn't actually assign the labor charges or the salaries to those jobs until you run payroll. And so if you run payroll every couple of weeks and you've been on 4 or 5, or your employees have been on 4 or 5 jobs since then, you don't know where you're at until you run payroll. And so it's kind of like I hope I made money.
I love that you brought all that. It's so funny story. We actually just we recorded a podcast with Luke at ClockShark, right?
Yeah.
And talked to one of your users who's actually using ClockShark. And that's exactly what she said. She said that once they started using ClockShark and she had real-time job costing data, you start to begin to be able to put out little fires before they turn into huge fires, right? We at our team can help you do after the fact work in process reporting, where you can see everything that happened last month.
Yeah.
But if you have a really good tool that's helping you see what's happening right now out in the field, that's so much better data.
Well, it's interesting. We have it's another tangent, but it's super important. So in ClockShark, and a lot of other time tracking apps have this function too, there's a budget for hours that you can put on each project. And you can basically make it notify you when you reach a certain point. And this is why.
Yep.
Not to track some things about your employees or whatever. It's to let you know when you're starting to reach that point that the job is no longer going to make you money.
I love that feature of ClockShark. It's actually something that we've encouraged a lot of our clients to use because we help them set up really good financial budgets and for each project. So we help them. This is part of what we are helping our clients do on a regular basis. And we've always told them, when you set up that budget and whatever the budgeting tool is that you're using, that you're going to send out your proposal through, also set the same budget within ClockShark, because then your foreman or your superintendent or whoever is managing that for you in the office can track that in both places and recognize when something's going to go out of whack with the original budget for the job. Does that mean we need to go back and get a change order? Why are we working so much overtime? Like, there's so many reasons to do that.
Yeah, no, the list goes on and on. But like we mentioned at the beginning, it just starts with tracking it.
Yep. Exactly. Good data. You know, it's the whole garbage in, garbage out thing, right? If you're not getting good data, we'll never know the true picture or story.
Yeah. Well, it's interesting. When I used to get invoices for projects being done, and it would just say one line item, cost for project, I used to think people were trying to hide things. But once I started learning more about like your side of the business, Tanya, was they just don't, one, they don't know that they need to track it, and two, they don't know how to track it.
Right.
And so it's interesting. I can always tell the difference between, like, I don't want to say who runs the business, but how well they're managed, because when I get an invoice, it breaks it down.
Yes. Yep. Because they know what they put into the budget originally.
Exactly. So if you guys haven't asked any questions yet, now would be a great time to bring them up. If there's something that's been burning, please raise your hand, put it in the chat box or anything like that.
Yeah. So Ashley, I think, Dwayne, explain how that budget works. It's not a budget it's not a money budget in ClockShark.
Exactly. It's hours, just hours. So it'll track hours per employee towards that job. So if you have let's see, 123 Main Street, and you have 4 employees working at that, all employees could technically make a different rate. So that's why we track it per hour. And so what a lot of our customers will do is they'll put an average cost rate company wide. So that way they get a good idea of where they're at. And so that way, when you set the hours, let's say there's 100 hours dedicated to a job. It's a small job, maybe 2 days, and you're at 95 hours already, and the job's not anywhere to be done. That'll notify you. And so you can quickly assess change order. Do we need to assign different employees to it? Do we need a different conversation? So that way you can keep tabs on the job while it's in progress, not when it's done.
Right. The other piece of that has been informative for our clients when budgeting hours out in ClockShark is, this is a conversation we have with a lot of business owners, small business owners all the time. And I will fully throw myself under the bus and admit that I do this. I assume as a small business owner that the time it's going to take me to do something is the same amount of time it's going to take all the people that I hire.
Oh my goodness.
And that is not true, right? And so once we begin tracking the time that employees are spending doing things, then we start to really understand, like, maybe this tech needs more training. Maybe this tech is brand new. There's all kinds of things you begin to assess once you have really good time tracking data.
Yeah, that's a good point about assuming people are going to work as fast as you are. I've got a greenhorn at my other project going on right now, and he's doing some painting and cut-in work. And I have to remind myself that no one is going to be as passionate and as energetic towards work if it's for your project. And so and the reason why I bring it up is because I gave my wife an estimate on how long it should take. And I gave her the estimate based on me doing it.
Right.
Yeah, that estimate was wrong.
Right. And that's like what you just brought up is like a common problem that small business owners have, right? Like we'll take the phone call, we'll make the sale. And I'm speaking to myself because I'm a small business owner. And we'll say, sure, Mr. Customer, we can get that done for you in this amount of time. Yeah. And then we don't take into account, not everybody that's working has the same amount of passion that we do, but also there's just real life factors that happen out in the world that we don't think can factor in when we say, oh, I know if I were going to go out and do it, it would just take this amount of time. Right.
Yeah, no, I completely agree. You have to account for the over and under.
Yeah. I love Ashley's question.
Yeah. You want to answer that?
Yeah. So this is something that we actually definitely encourage our clients to do, because again, I think as a small business owner, 2 things. If you're encouraging your project managers to get involved in this, that's giving them ownership. So yes, like helping your project managers to understand why we're tracking it and what it means to them and to their projects is huge. And I would really, the other piece of it is sometimes your project managers know things about your costs that you as the owner don't, because you've taken now a step back, right? And so let's say that at some point when you took a step back as a small business owner, at some point you didn't even realize that now then you guys are doing some specialized type of work, and those special wire cutters are required on the majority of jobs, and you're buying and issuing special wire cutters to every tech now. So going back to your project manager and saying, okay, every time that you hire a new employee, what types of wire cutters are we issuing? Or, how much drive time are there on all of your projects? Those types of questions, your project manager probably has a better pulse on than maybe the business owner who's a step removed.
Yeah, no, that's a really good point. That's something that I find myself helping with a lot, is working with those managers, those middle level managers. But Debbie has a good question, and I know Felicia, you're answering it right now, but I kind of want to let everyone see it. So Debbie mentioned they're estimating based on company hours rather than individual. And I'm going to take a crack in the dark because a little bit more detail needed on that. But she asked how ClockShark can track that, or basically what it does is a system like ClockShark. It allows the employee to track their time individually. So they clock in when they get to the job site, automatically assigns those hours to that job. So they know that Joe has been working at 123 Main Street for 3 hours, and then he leaves that job site, goes to the next job site. He just switches to 793 Johnson Avenue or whatever the project is. So it automatically assigns the individual employee's hours to that job rather than just going through a general set of hours that we hope the job's going to be done in. And so it seems simple, or it may seem super complicated, but you track those hours anyways on paper most of the time. I feel like, Debbie, that you pay your team a salary and you don't have them fill out time cards. That's usually your question. I see that a lot in that situation, but using a system like ClockShark will allow you to track the individual hours to understand your cost rate better going forward. Hopefully that kind of answered it. I feel like I opened up a can of worms, but yeah.
Yeah, and it could even be, I can throw a couple of cents in on this one too. It could even be that she's saying they've just sort of been using one overall cost rate. And I think the answer that you were giving is the more accurate time tracking data that you get in, the better you can start to break it down. Even if you just start to break it down by roles, right? Well, every time the foreman's on the job, we'll charge this cost rate. Every time a journeyman is on the job, we'll charge it. Just start small and break it down out of an overall company cost rate, break it down into roles, and that'll be a good first step.
Yeah.
And if you guys have a couple of minutes, or a second before you guys move on, Taylor had a question early on in the webinar and asked, can you review how you interpret the labor burden rate percentage? And if we can't get to it right now, just maybe send him an email.
I think that would be a good one for an email.
Yeah, let's do that in an email, because I wasn't entirely certain what he meant by interpret it. So I'd love to kind of dive into that more.
Yeah. And then if you, Felicia, did you grab his email address?
Yes, I did.
Perfect. Awesome. Well, to wrap it up, but we can talk for a while on this stuff because it's so important. Like the fact that you use time tracking, most people assume that it's going to be for GPS reasons. And in reality, it's for this stuff. And so we can get on to more and more how to do that stuff. But before we get out of here, I want to make sure that you have a way to get in touch with us. ClockShark, all the socials, right? Just search ClockShark. We're there. You can go to ClockShark.com. Similar to Tanya, just email in hello@ClockShark and you get to one of our amazing support representatives. By the way, fastest in the industry. We'll get back to you in about a minute, which is great. And then over for Tanya, it's theprofitconstructors.com, and same thing, all of the socials. And Tanya, if you don't follow Tanya on social media already, you should go do that. I feel like it's every other day. I see articles. I see you teach people, which is really cool. The content's fantastic.
Thank you.
You don't see that a lot, especially in the accountant space or any accountant type person on social media. And so it's great to see the information that you're putting out there. And it's not just, hey, give me your business. It's let me teach you how to do something so you can actually go win in business. So I appreciate the content that you put out.
I appreciate that. And we try really hard to not make it even just accounting specific. I think the most recent blog that we put out was about how you can join networking groups, right? And find really, and like join networking groups outside of your industry. So there's just some really good, we try to put out a lot of really good, high quality content.
Yeah, no, that's great. And Lori, this was a custom one-off hat that I had made a couple years ago, and the sweat mark is earned. No, I'm just kidding. Our marketing team can send one out to you. They're the Flex Fit Richardson hat. They're super comfortable. Mine's just been worn a lot.
If my husband's watching this, he's going to be a little jealous. He's going to be like, tell Dwayne to send me one of those too. So just Felicia, put that on your notes. Joe Schulte wants one of those too.
Yeah. No, they're great. I love these hats. It's the, like I said, Richardson trucker hat, super comfortable. And I think we just got a new shipment in a couple weeks ago. So we'll go ahead and send them out to you.
Awesome.
Well, awesome. We'll go ahead and wrap it up. Thanks for sticking in for this short hour. But if you have any additional questions, reach out to us on any of the socials or any information. And again, we will email this webinar out to you tomorrow, hopefully, or at least 24 to 48 hours. And we'll try to include a link to a couple things. And then I'm sure Tanya's going to reach out to you as well with a download for that template.
Yep. Or I'll work with Jessica and see if we can't get that included. We'll talk about that.
Yeah. Awesome. Well, I appreciate everyone's time. Thanks for sitting in there. And again, looking forward to seeing you.
Thanks.
Bye.